Hi everyone, welcome at Wavect. Today with Grace Gong. Welcome.
Hi.
Thanks for having me.
No, thank you for having me. Thank you, Kevin. Hi.
Awesome. It's a pleasure talking with you. Thank you for taking the time. And just to let the audience a little bit know about yourself, Grace is basically the founder of the Smart Venture podcast and Keeping Up with Crypto. So she is already a professional podcast, I would say. And that's going to be an interesting episode.
I'm Grace. So I am the founder and host of Smart Venture Podcast. Prior to that, I worked a little bit in venture capital industry, and before that, I came to the US as an international student. So actually, why I started my podcast is primarily because of I came to the US with no business connections, and I really want to, I actually really want to learn from business people who actually kind of like make it in their career. And when I moved to the Bay Area, in like San Francisco, I see a lot of my friends who went to school here. They can just like run into like a VP of a big tech company on their campus. And like, I feel like I wanted to recreate that kind of experience for people who don't really have access to these people, as well as like just people live in foreign countries or like trying to, just overall learn about how to develop your career. So I kind of wanted to create these kind of coffee chat experience for people so they can, when they are driving to school, driving to work, or just doing laundries or something, they can like also learn something. So basically that's how I created my show. And
Awesome.
Primarily I interview some big tech company executives and unicorn founders and investors on just like their career journey. And so that's like the TLDR of what I do. And recently I'm just like really passionate about Web3 and just I'm still learning, definitely no expert, but here I am.
Awesome. So the topic for today might be super suitable for that, based on your knowledge, background already. It's about due diligence for Web3 companies. So your standpoint on that will be super interesting. And considering that, I think I would be super interested if you, we all know basically that VCs have very different approaches, right? Some VCs just invest into teams. Some VCs have their fundamental check marks, right? And since crypto is a very special sector, I think at least, but please correct me if I'm wrong. What would you say, what are VCs in particular looking for in that sector? What's the main focus for them, and how might that have changed regarding the current market conditions?
Yeah, totally. So I will start with the current market conditions. So like, well, actually, I'll start with like the traditional investing versus like the current like crypto market investing. So like, I mean, this is not investment advice, and I'm just talking about my observation. It's just my personal opinion, not like, just nothing that should be, you should not use this as like financial advice. So basically the TLDR of like the venture capital industry, I feel like most VCs are looking at three things. Number one is the team, and number two is like the market, and then number three is a combination of both. It's basically why you why now. And in terms of like the team, so people would look for have the founder found anything before, have they worked with their co-founder, and basically their ability to have a vision as well as like executing on it. A lot of VC were looking for people with great storytelling or sales ability, because that's the core skill that you would need to recruit new people or like just like landing new fundings down the line. So that's like what traditional VC are looking for, in my observation, as well as like my personal experience. And number two would be the market. Like basically, is there a new trend or new wave, that like a giant shift that's happening, as well as like how big is the market? And the number three criteria, I feel like most people are using is essentially like why you, why now? Like, why are we doing, like, the market could be early or too late. So why now is a good time to create something in a particular sector, as well as why you, like, why your team has like the superpower or unfair advantage to take over that specific sector. So those are like the three traditional like criteria that people are using for like evaluating like just like venture investing or like evaluating like startups in general. And in terms of like Web3 companies, I kind of feel like it's very similar ish. So like when you're looking at like NFT sector in specific, like there's a lot of new venture money going in. We see a lot of high profile VCs like start investing in either the specific crypto project, or like investing into funds that investing in just like this sector in general. And what I can see is like, it's a little bit similar as like, when NFT project have its own, like its roadmap, as well as like you're evaluating the team. So the roadmap is essentially similar to like a business plan. And like that's how I feel like when I look at like the roadmap. It's sort of like people are creating like an experience company in general. Like, when you look at the utility, it's like, oh, we're going to launch some hoodie and like, we're going to throw events, we're going to create conference, we're going to, drop our podcast like a week before, a regular person would hear it. So there will be like alphas in it, and like there will be some sort of subscription model, like, within 3 years, if you don't sell it, you can like, collect these other NFTs that will be randomly airdropped to your wallet. So those are just like the general roadmap that I've seen. Especially through like, 2 weeks ago in NFT NYC, I feel like a lot of these are fairly generic. I see a lot of really interesting things happening, but it's more of like creating and just like experience, as like you're going to amusement park, or you are just like going to a bunch of concerts or like a bunch of parties with people. I don't really see anything that's like extremely like different from the, I guess, like the Web2 era per se. And then like recently, because of the market is down, so I see a lot of VC looking into more traditional things, as like, I like the infrastructure, or just basically the whatever that's powering the consumer facing tools. So although like I feel like NFT I see there's so many interesting NFT related projects, or just like applications built on top of these blockchains, but like I feel like because of we're in an economic downturn, people are really looking into a more stable approach in terms of investing. So they're looking at more infrastructure based like companies. That's my overall observation.
Thank you for that insight. In general, I think you said a lot of interesting things. One thing in particular is in market downturns, investors tend to focus on more fundamentally sound investment opportunities, right? So based on that, it's always interesting that most project founders actually try to be the first, you especially read it in Web3. We are the first. And I'm quite interested if you confirm this, but I think so, is most first movers are actually not those companies that are successful or make the most money out of it, right? So statistically and historically speaking, at least think it was like around that .com bubble as well. Yeah, quite similar. But please correct me if I'm wrong. And based on that, it's very interesting, as you said, more and more startups already launch quite similar projects. Like they're doing another NFT collection that has something to do with shoes, or is some sort of PFP, profile picture NFT, or whatsoever, right? And yeah, it's no wonder, as you said, that companies invest or start going back to more secure investments, right? I think that's always the part of the market cycle. And in general, I think it's also good, right? Because it cleans up the market from bad use cases, which haven't got into haven't got the strength to actually sustain such markets. And as you mentioned before, one major part of all this basically is always the team, right? Being able to sell your vision, your product, no matter if it's now innovative or not, which also means being able to present it in front of investors, right? What do you think? Is it more beneficial in general if projects try to raise, because I have an opinion on that, but yeah, interested in yours. If projects try to get pre-seed funding, like before they actually build a real live product, or if they should wait and try to build it themselves?
Let me rephrase the question. So you're saying like, should the company build the product now, or should they wait until they raise money to build the product? Is that the question? Or I'm sorry.
No, all good. Perfect. Yeah, in general, last year it was more like pre-seed money was the way, I think, right? People didn't have a product yet, sometimes didn't even have a roadmap or website or anything. They just launched and tried to get funding, right? The same with VC money. And the market might have changed. Or how do you feel with that?
Yeah. So I think because of like, I can only talk about like my recent observation as like, I went to FTOIC. I feel like a lot of these projects still exist. Here's why. I think number one is because of the NFT market was really crowded. So there's a lot of enthusiasts in it. So like a lot of people formed DAO to like, create some sort of NFT project. And then I've seen like there was no like company, and there were just like probably like about like 30 people or whatever in like a table, like in a booth. Like typically are only 2 people representing like, a company or like a startup. And then there was like 30 people in a table. I'm like, what is this company? And then they're like, oh, we're DAO. We created this NFT collection. And so I feel like a lot of the money wasn't really coming from venture capital. It was more from like enthusiasts in like a space. And I don't really see that enthusiasm die down right now, because as you know, like a week or 2 weeks ago in FTYC, there were lines that are hours long in front of a particular, like NFT house. And then like when you go into the NFT house, they only serve you like black coffee or like Costco water. And those are just like people spend hours waiting in line. And I feel like based on my experience with my friends, we're just all like having fun. We met people in line, and that person took us to like a different NFT project. So it was just like, I think it's a really cool like experience as like you're making friends in line. And I think overall, when you're observing, like, I also went to NFT LA and like spoke with like some Hollywood producers, and basically what they were saying, it's like they've seen why they were really interested in tapping into NFT was because of like people can co-create like the superheroes or the next generation of superheroes. They could, like in the past, like when you're making a superhero movie, it was based on a cartoon book. And then now it's essentially just people, like they could like probably just like put people in a group, and then they can come up with the characters. They can really personally investing in that group, similar to the current NFT community as like me and my friends standing in line. Although I personally did not purchase a particular NFT in that line, but like, they kind of, so like I kind of found my community there. I like with my friends, and then we made new friends, and then like our friend group just like expanded, as well as like, we hung out throughout the event. And I'm sure like the next year, if we're all going together, we're all going to hang out again. So I kind of feel like because of that community bonding, as well as like people personally really invested in that community, that's what make an NFT project surviving or like thriving. And so to talk about, like, a lot of people are saying, oh, I feel like it's gonna weed out some bad projects. I personally feel like define bad projects. Like if everybody are enjoying themselves and then they're just like chipping in a little bit, like, $10-20 into a particular project, and then they can just like make new friends and then chat with a new group of people after the pandemic, especially when you made zero friends during this entire 2 years. And then now all of a sudden you can just have a chat group and then checking in with each other, GMing each other every day. Do you think that's a bad project? I don't know, because there's no utility, but however, I did find friends there.
Yeah, a great viewpoint, actually. It always depends, right? It's always about the metrics, right? Community is everything, I think, with NFTs, right? And utility provides just some fundamental value, right? So basically, it's always about actually the characteristics of the NFT investor, right? Some people are just in for the money. Some people are, as you said, for the community, for the fun, for the experience. And some others are just like, I want to try it. I want to see where it goes, right? Just some experimenting.
I also think beside the experiment piece, I think there's, as you mentioned, there's like different people are in it for different things. There's people in for the community. There's people in it for like the entertainment. There's people in it for just purely making money, right? Like I think like from like a venture capital perspective, like I think essentially like, okay, so this is my personal observation, not representing everyone. I feel like it is a numbers game in the end. Like, how many projects can actually make it in the end not only depends on like, do they like have like a really stable team? Like it is a really risky asset in general. And when because there's so many factors involved, like if you want safe, maybe I think even investing in a Shopify store is safer than like, a lot of these like VC investment or like any other type of like investment, because there's predictability. So when you hit the certain threshold, like, we need to double down on marketing. We need to double down on, the distribution channel, or like we need to just produce more in general, or like, we need to produce lists because like people want like specific things on like top of the design. So there's a lot of predictability. But however, when it comes to VC investing, like there's so many like unknown factors in it. And speaking of that, like I feel like, as previously mentioned, there's 3 different, I guess, like aspect. Like, do you like, are you investing your time and energy or money into the community or entertainment or the money side of things? Like all of these have very different, like you may expect very different returns from the projects. And like I also feel like because we're in a very, very early stage of the NFT space in general, as like the most successful project were not like what was created like a year ago, or like, I feel like those are just like so much unpredictability of when what will take off. So I don't think it's really predictable for people to say, hey, like I definitely think A or B is gonna quote unquote make it.
It's definitely super early. So there aren't, what you're saying basically is there aren't any fundamental metrics already, or are there, except of some very basic ones to actually predict to some extent which might be successful.
I think there is like qualities that you could like consider as like good indicators, as like if this person is gonna like take your money and run, is like, I mean, like, or like, you can basically fact check if they're a legit person or like their past like work track record. However, I don't really see it as like you can kind of create a thesis based on whatever you're observing right now, because the industry is so new. Like I think anyone who is predicting something is based on their past Web2 experience or like past industry experience, to be specific. I know like, some other people who come on your show with like brand experience. I think like it's very different for like a brand to adapt these things into like to engage with their fans, right? Like essentially they just create like a royalty program, like membership based stuff. So, those are very different than like the purely like, Web3 native grassroots projects that are coming out of people's, room, like technically. Yeah. So I think I don't really, so to answer your question, I don't really think there is any kind of thesis could be formed based on the current market condition, as well as like how long of this industry, quote unquote, exists. So that's my 2 cents. And I feel like a lot of it were just like, can a team raise money? And then can the team raise money were also depends on the benchmark of like the Web2 era. As like I've seen the current founders who have been raised money were all share similar work experience as like the Web2 founders, as they what type of work experience they have before they enter the scene. And then like I feel like those indicators are pretty traditional, to be honest. So like I feel like there is not much change in that category. So I kind of feel like, to be honest, like Web2 and Web3 in terms of investing or venture capital investing are not extremely different.
Interesting. Yeah, in general, I think it's always the same, right? With growth stocks as well. Just looking at them, basically, fundamental metrics haven't got actually the significance they had like 20 years ago, right? Like the KGV and so on. And in general, I think we can say that crypto is still evolving and there are many things happening right now. And the best you can do basically is being careful and just also a little bit going with your gut, basically, right? How you're basically feeling about the project founders, how does it look like? How strong is the community, right? How much trust is there? And based on that, if we go one step back, basically, I think we have two views right now on that issue. On one side, the project, right? How they can, if they want to, convey that value to their investors. And on the other side, how can VCs actually recognize that? We already had the second one. Now it would be interesting on how can NFT project founders actually try to be as trustworthy as possible, to be as fundamentally worthwhile as possible, and to actually build great communities on a fundamental value.
Yeah, I think in general, I don't like, in terms of like what people or like what companies can do to like set themselves up for success. I think there's no metrics. In the end of the day, I think you really need to focus on the core, like quote unquote fundamentals, as like, build a great product. And then like essentially like, sure, VC want to see the traction, but I feel like you can only fake it for so far. And those, historically, there's so many companies that are raising a huge like amount of money, but like they are still failing. There's like tons of that. And then I don't think not able to raise money is going to be your key block, as like if you really have a solid team, as well as like you really have like a solid product, like I think when you can demonstrate that you can generate traction, as well as people really find value, I think we're in a place that's decentralized enough for you to kind of get the initial funding to like just like start your company without getting the venture funding.
Awesome. Yeah, there's actually a saying, if you have the right team, it doesn't matter so much what you're actually trying to do, right? If it doesn't work, you've got your team and you can work around that.
I think also like, I think the other part is, I think the general fundamental things about like VC investing is not like, it's totally also applicable for like people to trying to be successful in their zone. Like in terms of like, I think like it's really important to find a really big trend. I think to have huge success, we're not talking about like, can you start a small business and succeed, or like start an agency and succeed. I think like if you really want to succeed big, you really need to find that big trend to like push you, to push your company to like, not fly, but like fly, I guess. So like, I think most successful founders I've chatted with on my podcast, or like successful leaders, I think all of them know who they are. Like they all like are able to just like really stay in tune with themselves. Like they know what's their strong suit, what's their weakness, and then they hire their weakness or they partner with their weakness. So let's say if you're really good at, if you're really technical, maybe you should partner with someone who is great sales. And like if you're really, like that's in that sense. So like are they able to be able to like, do a certain, have a certain skill set for succeed. So for success. So basically I feel like they all really know themselves. So, and then they know what they have, what they don't have, and then how to get what they don't have. And then number two is like the most successful people all really take big bets on the trends. Like people would see, like people would see like, from let's say like web browser to mobile, like, or they would take advantage of like crypto trends, or like in general, they're all of them almost like, pick a really big wave that they really take advantage of that wave instead of just being really stable. People are really taking big bets. So those are like the two general trends I've seen from like chatting with the successful people. So I believe startups can also just apply this to their own game, essentially. Like, number one, figure out like what exactly are your strong suit, why can you beat, let's say, 80% of the people in the market, and then number two is like, are you really riding a big wave, or are you just like, being in the red ocean, like swimming with like every other sharks?
Yeah, blue ocean is definitely a big one, right? What many successful people, at least as far as I know, already say is it's also about the networking effect, right? The more people you can reach with that business idea, the easier it is to multiply, right? So that's definitely a super interesting nuance to that. And in general, for everyone who doesn't know the blue ocean and red ocean, Grace, I think feel free to explain it. But in general, it's just how easy you can provide, also to distinguish you from the market, right? The more competitors there are, the more red the ocean is, basically. But please feel free to add.
Yeah, totally. I think like, so another part is like, the demand and supply. So if there's so much supply into like a really fewer demand thing, so like you're definitely, swimming in the red ocean. And like, as for what you just mentioned, I guess like build the distribution or like have the go-to-market strategy, or like the network effect is really important too. As like, I feel like you're really smart. You are currently building your audience. You're building like a network for yourself. Like once you are ready to launch a product or something, you already have the distribution. And I think like that's really important, especially in the Web3 age. I chatted with many, like, even now to be leaders or like investors, were all using communities to sell their products. I was chatting with like Dan from Decebo the other day. He, like, this is my most recent episode, but like I chatted with him the other day. Basically, he was saying like the B2B companies started selling through community as well. So they were building like the dev community. And so like imagine a B2B product sold within a community. So those are trends I've seen, as well as like chatted with the CEO of Notion. She was saying like when Notion started, it was like, oh, spread through like community. So they had like people to just like they hired someone from the community to I guess like quote unquote run the community. So like I feel like it was, when I was seeing those two trends, I kind of feel like it's very similar to like Web3, as people were saying, like, as you just mentioned about the network effect. I feel like building a community is kind of that network effect. And as like you are building an evangelism group, so people can evangelize themselves on certain things, and instead of like you trying to sell someone something, because right now, because of the internet, like the knowledge and like the information is kind of decentralized. It's getting more like just like transparent than ever. So I think it's extremely important to build that community and build the trust between the members in your group than just, trying to hard sell on something.
Yeah, that's super interesting. I think or basically, as we all know, brands basically live off emotions, right? And since you just said the internet is pretty transparent, actually. So it could be out of necessity that you actually need to convey or create emotions associated with your brand to sustain in such a competitive market, right? Since there is always someone who might have a slightly better product. There is always someone who is slightly cheaper than you. There is always someone who has a better network than you. So except if that particular customer is attached to your brand, then you always win. Just look at huge brands. No matter what they do, they always, just as you said, have their fans.
Yeah, I think another thing is like another why community is really important is like you can technically get all your ideas from that community. I chatted with the founder of Xfinity, and then basically essentially he was also rise up from the community. And so essentially I feel like right now a lot of like different Web3 products or like people are taking ideas from their groups. Like, so for example, when like a couple episodes ago, I like run a survey and the people suggest guests I wouldn't even think of that should be on the show, but like, and then chatted with the guests and like it was all just like a really interesting conversation. So I kind of personally just take advantage of my like, you know, the ideas coming from my community, as well as like kind of like also serving the community in a way, as the community are interested in knowing a certain things I want to deliver to them. So instead of me creating something that I personally want, I wanted to be able to deliver something that like the community people are kind of like want to hear or want to know. I think those are serving both ways. Like I think I just want to, I think like a lot of the community members are way like smarter than me. Like at least I can only speak about my personal experience. I literally think like my community member are all smarter than me. Like whenever I run these like mini Zoom chat every Friday or like every week, I learned a lot from just like chatting with people in the group. Then I feel like a lot of people were just like really humble, and then like I think it's just so important to just be there and listen to them, as well as like, you know, trying your best to meet the community's expectations. And I think those really matters in the Web3 world. And I think similar to building a product, like a lot of the times people will do a lot of user testing, but in the end of the day, I think a lot of the successful leaders are spending a lot of time listening. As for previously, like the former co-CEO of Chipotle came out on my show. He chatted with like 20,000 employees in Chipotle. Chipotle is like a famous like fast food restaurant in America, not like the healthy kind of fast food. And then so basically, yeah. So basically like they so yeah, like he chatted with like 20,000 employees. He would go undercover to go to stores to be like trying to like go through the manager training track. And I feel like those are just like really awesome ways to like just like listen to the community. However, I think now there's a better way to do it, which is, you know, literally just like hang out in your own chat group and then see what people are saying about you. Like, although people are not going to be like, oh, this sucks, but like, you know, you can see what people's sentiments are. Like you can see what people want from you or from your brand or your company, and then just really lean on that voice and creating product based on that. So I think those are just like really great ways to engage with people. Another great way is like to reward people with ownership. You know, like you are not really building this company only on your own. You're no matter what company, if they're successful, they really need to build a product that people find useful. And how to build a project people find useful, like that's how you hear, like besides like you listen to them, you also give them some ownership, because of when they have stake in the game, they would actually tell you how they feel and what they think, and they will actually maybe even help you build that. Essentially, like I think that's just next stage of evangelism, as you know, like it's sort of like when you like, yeah, like when they are in really both like mentally as well as like monetary wise like associated with your product, they are totally gonna just like, you know, contribute into it. So like I feel like those are, and then they're also getting rewards from it, right? Like, so if they're incentivized by that, I don't think you can lose, as because of like essentially in the end of the day, you are building something that you want people to use, and then you already have that core user, and core user are the people who you are also like taking advice from. So essentially you're building something that's really hard to fail, in my opinion.
Awesome. Yeah, in
I'm
general.
rambling myself. I'm sorry. It's a lack
No,
of sleep.
good.
Okay. Like,
Awesome. Awesome. I think two very interesting aspects actually to that, in my humble opinion. I think on one side, basically, it's about the beginner's mentality, right? You basically, as you said, you always try to listen to people, even if you are seduced to think you might know better. If you pay attention, you always find something which might help you and hopefully the other party as well to grow in some sense, right? That's, I think, one very interesting thing you said. And the other thing is, in the past, basically, you had to do surveys, you had to go outside and ask people. And now you have that real-time feedback. Every time, with every small change, you can involve people. And that's actually a superpower, right? And yeah, it is. That's,
I
as
mean,
you
this is
said.
also, yeah, this is also a superpower you can have too, as like you have a community of listeners who are listening to your show. And then like you'll be surprised, maybe like, you may not think people will like actually say anything, but like I think you can totally follow, like, I guess like their sentiment, or like essentially like people will, in the end of the day, people are people will say like how they, there's always someone in the group who will say like, give you like critical like feedback or something, and then you can like just like adapt on top of it.
Yeah, definitely. And I think these kind of feedbacks are, if they're constructive for sure, are super valuable, because you can grow from them. You can, as you said, adapt and maybe invent some new approaches on how to provide value. And yeah, I would say, if maybe you have, because you talk to a lot of amazing people, do you maybe have any interesting or exciting story to share from your past podcasts, or some entrepreneurial story or whatever?
Yeah, oh my god, that's a challenging one because I find everything interesting. um
For you, if you think it's in some sense.
yeah, for sure. I think like this, like the Kosi of Chipotle one was really resonate with me, as he chatted with like 20,000 people, like, and then he would go undercover to go to stores. I mean, those are just things I'm like, I think about doing. Like, I think like I would do it, but like, I mean, would I go undercover to really like just do everything from scratch? And then like when I'm the CEO, maybe, but like, I mean, it does really inspire me to just like really think about leadership in general. Like in the past, like we talk about like leadership is like, how do you manage people? And then you go to business school, and then like you do these like really random case studies. But this guy, like, which I have a lot of respect for, literally go into each store to just like visit and then like talk to people. Those are just something that I really admire. And I feel like that's actual charisma right there, because
It's
you
brave.
really like, yeah, like you can really like, you can't really understand someone's life unless you go through it, right? Like I feel like this is like a really great example of leadership. And like I think recently, just like the founder of FTX went on the founder of FTX went on the show like a couple months ago. But like when you're looking at these big back he's taking, that's also really interesting to me. It's like, I think you know that's definitely like a really different thinker, as like when you are observing their business strategy and how quickly they have grown with such a really lean and effective team. I think those are just like totally going to go into history to like, people, those are just like some really interesting like management philosophy or like growing a business strategy that like I feel really lucky to experience in my lifetime, to observe how other people would run company so efficiently and effectively. So those are just my personal like obsessions. I love to study like business related things, and those just like watching those people run these companies, like I just like feel like I was really able to learn a lot by observing or like chatting with them.
Awesome. Awesome. I think that's a great ending. Thank you, Grace, for being here. It was really a pleasure talking with you. And I think there have been a lot of interesting things said. And yeah, any last words for the audience?
Subscribe to Kevin's podcast and follow him on LinkedIn. And don't forget to just hit the like button and thumb up. Yeah.
You're too kind. Follow Grace too, for sure. I will link her in the description as well. Thank you for being here. Have a great day.
Thank you. You too.